Welcome to the Final Bar, the show where we check out the most interesting charts to get set up for the following week. With some intermarket studies, we'll be finding out the inflection points for minimum risk and maximum reward. Today's show is a recording that I recorded just a few days ago, but the point I want to make is that this type of stuff is timeless. We just want to use it to use the website to find money-making profit opportunities. And I think the critical point we have is a lot of times, we have analysis paralysis, and so I want to try and give us methods to work through that and be able to continue your trading and make it a little bit more profitable. So today I'm going to show you consumer discretionary, just why it's important, and then just take something I know nothing about, the apparel or restaurant reviews. It doesn't really matter. Going through, looking at the price action on the stocks, selecting them, setting alerts. One thing I specifically want to talk about is when is the end of the trend. And then as with anything, usually when I buy into a sector, so let's just say I bought metal stocks, well, I'm going to pick 3 or 4 or 5 different metal stocks to buy, not one. So I'm trying to find different ways of attaching, increasing my profit opportunity in a given sector. And the way to do that isn't to pick the best stock in the sector or only one stock in the sector. That can really work well, but I think we all remember a recent food scare from one of the food companies, and the stock fell hard. And we could look at that as, when is the end of the trend? It doesn't work out that way. Tapestry, the chart was in the top right-hand corner and fell very, very hard. So I think it's important that even if you're picking sectors or stocks, that you try to diversify wider than, say, 5 stocks. And I know there's some TV personalities that would recommend that, but I would suggest looking at a broader collection and working through that way. So today what I want to show you is building on what we learned a couple of days ago, how to go in and just how to start working through something. So today is it's Friday, May 11th. I realize the recording will be for a few days from now, but the point I want to make is the S&P's flat today at the time I'm starting this. There's a little bit of movement going on, but nothing really major. Nvidia reported last night, and the stock's down a couple of percent, and everybody's talking about that. I think what we want to do is get into trying to find on quiet days like this, just going and setting yourself up so that as things are going forward, you can find things. And you can use scans. That's one way to do it. And without a doubt, I think that's a great way to do it. The point I want to make is that there's opportunities every day, and we just have to get set up for it. So first of all, let's go into the S&P 500. This is right from their website. You download this, and it just tells you the constituents of the S&P 500. So we can see Apple's the biggest, and Microsoft, Amazon, Facebook. So these are top 10 companies. We've all heard about them. But looking through the percentage by industry group, we can see that consumer discretionary is 13%, healthcare is 13.8%, financials are almost 15%, and IT is 25%. So very large, but the reason I'm going to go into consumer discretionary is because it's stuff that we might see in a mall or we might see out on the street and not know anything about it. But the real question would be, if it was going to start to work, are you involved in the stock, and then why not? And then if you chose to get involved, how would you know when to leave? Because you can't stand in a Jack-in-the-Box restaurant and decide whether or not the stock is topping. You need some other clue to help you decide that trend. So we're going to talk about that specifically today, and that's hopefully going to help you a lot just looking through these tools. So first of all, the industry summary, we could do this 2 ways. So we could have either got into the market summary. Let me just go back one here. So members dashboard, and once we get in here, we're going to just scroll up here and sector summary. So you could either go through the sector summary and just see what's moving today. Energy sector's the best performer, but as you can see, nothing's really going anywhere. So here's the cyclicals, and when you click on cyclicals, it's going to bring up this whole list. Now, if you go in through the industry summary tab, which was the other one, right? So scrolling down here, so the one I just went into was sector summary, and it says you can drill down into the major market sectors. So that's what I did. I was on a tab and then I click in. So it brings up all the sectors, and then you click on cyclical sector and it takes you into just the cyclicals. If I do it the other way and I go by industry, it's just going to list them all. So I just want to make sure you understand it's the same data, it's just how we get there, but here's all of the different areas of the market. Okay, so anyway, we're in here, and one of the things, apparel is doing pretty well today. So that's the reason I chose apparel. I don't know a lot about all the different apparel stores, footwear, clothing and accessories. A lot of the apparel retailers just happen to be footwear stores too. So anyway, we're going to click in there and work through that. So with that, I'm literally, one of the things that I want to show just really quick as we work through this, we're going to start at the bottom and just look at these charts as we go here. What you should see is that the chart is improving as we go up this scooter ranking. And just finding the better charts is a very important thing. So as we work our way up the page, we should see the chart starting to improve in shape. So here's Signet Jewelers, doesn't really look like a stock I want to own. Here's L Brands. Now the only reason that might be interesting is because of the double bottom down there. This one's a $1.60 stock. Don't really want to look at that. Here's Francesco Holdings. This one IPO'd not too long ago, a couple of years ago. And by the way, at any time you can just right click on this and open in a new tab. And so this one's trying to build a base here, but just here's a 5-year view. What you see on this 5-year view, well, this isn't the one I was thinking. But this stock continues to, it's got a big downtrend here, full stochastic buy signal, higher low. Maybe there's something there if you're interested in playing some beaten down stocks, but I think there's a way to keep looking through these. But what we're going to see is, as we work our way up, the chart shape should get better. Here's the Gap store. So we can see that it had a huge run up, and then all of a sudden, for the last 3 or 4 months, it's pulled back. Now, this is a good example of how to know when the trend is ending. So I want to just flip over and grab that one. So first of all, when I put my scooter ranking, which is the black line, I do it so that my screen real estate is a little bit better, and I think I can even zoom in a little bit more here. The point I want to make is, how do we know when this uptrend in price is going to end and when we want to leave? And I think the bigger issue is that you get a stock like this and it's way up here and you don't want to sell. Why would you want to sell now? Because it's still continuing to rise, and then it starts to get shaky and you don't really know. So there's two things that we usually do, but I want to try and propose a few different ideas. So first of all, let's just change the way this is displayed slightly. I'm going to separate these so that they're broken out into two pieces, and then the next thing, I'm just going to extend the width again to get it back to full size. And I like to use custom width 1400, height 750, and if you just look at that, you'll see that it basically fills my whole screen. This box on the right here is set up by the zoom thumbnail. If I take that off, then everything fits a little bit better. Okay, so one of the things that I've noticed is that when a stock is trending really well, you can annotate on here, and what you should see, that was a pretty poor first annotation, what you should see is that there's a trend here and this trend line breaks, and then there's another trend here and this trend line's breaking. So when something is outperforming and stops outperforming, that's important. So in this case, you can see that on this purple area, which is the relative performance of Gap stores compared to the S&P 500. There's little short-term run. So if this starts to break out and first, you got in it because it broke, say, through this resistance and it's starting to take off and you're interested, or on a bigger picture, it broke through here and now you just want to buy and hold and it comes back, this is, testing that breakout level, and then all of a sudden it goes on a big run, $25 to $35, a 30% run in a month or two. The question is how long should I hang in there? And one of the points that I would make is I find that after something has run up, normally if it's breaking to new 3-month lows, that's probably if you don't want to be a quick trader, that's probably a place to at least take a cue that something isn't going particularly well. And you can clearly see that the uptrends we've had in this case stop happening. And so, maybe this retest of the high when it fails after doing nothing for a month probably tells you that, you want to get out. But you can't wait for the scooter ranking. The scooter is an excellent entry method, I find, but not a great exit method. I find it's a little too slow to depart, and maybe up here you're still okay, but you're going to be at $32 for a departure point after watching this oscillate along, and the relative strength continued on for another couple of months, basically tracking with the S&P 500. Now this is also when the market got wobbly, so that's a bigger picture. But the other way to do it is I'm just going to get out of this, and I want to go to a 5-year chart, and the reason I want to do that 5-year weekly, we're just going to change this to weekly. When you have something in a big uptrend, and this stock doesn't, so it's a little bit hard. So maybe as an example, I should just go to Chipotle Mexican Grill. This stock was doing very, very, very well, and you can see that on relative strength terms it was doing pretty good. And then even as it started to, in here it kind of stops outperforming the S&P 500. And then what happens is it goes on another rally. This is another 3 months, and it starts to break down again. The scooter's breaking down roughly the same point in time. But the issue you have when the stock's starting to break, the scooter here was clearly saying leave on a weekly basis if that's your time frame. But, drawing a trend up here, wouldn't have been too bad. But the real issue is you probably, if you were trying to catch the big trend because this thing was doing so well, maybe it's out here. Now it starts to break down here. And the other thing you'll start to notice is that the relative strength is starting to give up. And this has been 6 or 7 months. So, concerning, but you can see the scooter ranking comes down to 10, then they probably had a good earnings response or something and came back up and tested the prior high. Now, it's always hard. Which hump is the right hump to quit on? And I think, when you have a trend coming up like this, you have this SCTR kind of dipping down for a couple of months, and then really it has trouble kind of stabilizing at the top level again. You're getting to a point where the stock is becoming average, and it's not average till it's below 75, kind of between 25 and 75 is an average stock, average price performance. So what it's telling you is that the price behavior in here is better than 75% of the stocks, as long as you're above my little blue line here. Well, when it starts to fall out of there, that's a clue that something's changing. And here we went for 7 or 8 months and, couldn't really outperform the S&P 500. And then you might remember the S&P 500 topped in about May of 2015. So everything kind of dragged down. Well, this went on one more rally and came back up and folded down pretty quickly. But then it continued its decline, continued its decline, and continued its decline. Anytime a stock starts to take out like 1-year levels of relative strength performance on a weekly chart, that's a really important clue that, even if it was a great performer before, you probably want to leave. And in this particular case, it would have got you out relatively close to the high. Maybe it's in here, but the bottom line is you had a big uptrending stock. Now over here, we had a big downtrend, and we could pick it up here or we could pick it down here. The only reason I'd pick it down here is I would just say, it kind of gives us a parallel channel. And that looks to me, pretty much the downtrend we were in. Now we seem to be breaking this downtrend, and Chipotle recently surged, call it almost $100, and then gave a little, it's in a flag pattern currently. But the scooter ranking is starting to improve. The relative strength, yeah, I need to go get a line here. The relative strength is starting to break above to new one-year highs or near one-year highs. And so this is perhaps a clue that the downtrend is ending, and perhaps this is getting going again. But one of the things for me when I'm looking into the market, and I want to be a long-term trader, not a 3-day trader or a couple of week trader, is to just make sure you're aware of how it's doing on a weekly chart in terms of relative strength. And if the chart is starting to break down, and here you can see we really didn't outperform the S&P 500 very much for the last, all the way through 2014, 2015. It was trying to hold up, and this recent surge makes it look pretty good, and I agree. You'd be thinking we're going on to higher highs, but the problem is price action starts to stall here right at previous highs and then starts to break down. And just the fact that now we're back into kind of a 2-year range of relative strength just says that the chart that's been so amazing is finally giving it up. So try to use that relative strength component there. And another stock that we can show this on, let's just, I don't see any reason to keep all of these lines, is Crocs. And Crocs was an apparel retailer that had a fabulous chart, and I happened to own it. This was early in my learning about technical analysis. But this chart was literally going straight up, and everything was working out well, and you can see the relative strength here going vertical, and then it started to break. What happened here was they had an inventory build. It was nothing to do with slowing sales. The inventory started to build on these Crocs shoes, and it went from $75 to 79 cents. So, roughly a 99% loss. And I was trying to buy and invest in the stock in around the $55 level. But the one thing that I was surprised at here was how quickly it left. And what I didn't, just not understanding is when these retail companies fall out of fashion, so they're either in trend or out of trend, it's very quick. The reversals are really vicious. So you've got an uptrend in price here, you've got an uptrend in relative strength. And when something has this much momentum and also starts giving it back, you do not want to wait for a 1-year low in something so trendy. And maybe, maybe it's a particular type of toy or something that's the season hottest item, Cabbage Patch Kids or something like that. And all of a sudden it is no longer. Try to use these relative strength lines to get you out of this sort of thing, because you're never going to know from the earnings report. No CEO is going to tell you to sell. But you need to understand when the investors are. And so when you can draw relative strength trend lines and they're getting broken, it's at least a caution that you want to be much more disciplined and make sure that you're not just letting the waves ride you out, and all of a sudden you go from this uptrend to this 2-year or 5-year downtrend on this stock. Very, very difficult to own. Okay. So let's go back to stock selection, and literally just working through here. One of the things we see, this chart's trying to turn up a little bit. Here's Nordstrom. All of a sudden the chart shape is better, and you can see, look over here, the scooter is now at 72, and I like it above 75. So all of these ones we were looking at in here have very poor chart shapes, and unless you like to bottom pick, those are going to be hard. Now here's Shoe Carnival. It's in the apparel group, not the shoe business, or not in the footwear. But there's a downtrend line here. We could just literally open link in new tab and go look, and there's a nice downtrend sitting here. And if that was going to break the downtrend, then what we would do, let's just draw that in. We're going to draw this downtrend line, and let's just say that we're interested in owning this because we know that sooner or later somebody's going to go buy a new pair of shoes. this is set up pretty nicely from a technical perspective. The SCTR is getting a little bit weaker. But if this is going to break through $25 or give it a little room, $25.50, we want to know about it. And here's a previous high at $26, so that would be new 3-month high. So let's put a scan in for or an alert in for a new high at around 26.10. Okay, so we're just going to not save this. But what I want to do is I want to go to the home page, members dashboard. I want to set up a technical alert. Okay, and I'm going to go in and I'm going to say when this ticker, Shoe Carnival, so SCVL, when SCVL crosses above $26, whoops, crosses above 26, send me an alert, and it'll email you or SMS or whatever you want. And so if you say website, it'll just pop up on your screen. But I'm going to say email, and then I'm going to say save alert. So from now I don't have to keep monitoring it, but what it's going to do is it's going to just tell me when this stock goes above $26. And the idea being that you can take these alerts and just, you don't need to keep track of all of these trends, but as soon as this starts to break out to new 3-month highs, you'd like to be alerted. That's all we're trying to do here, is just set this up. So as you're scrolling through this, watching golf or whatever you'd like to do, you're just finding charts that are nice chart shape. That one's trying to break out of a giant 1-year base, so new 52-week highs. I would say, this is a pretty interesting place to buy it. And look at the scooter ranking right at 75, kind of the level we like. So if it started to improve at all again, you probably want back into this. Now, I don't know what they sell, or I don't really care. I'm more looking at the price action. And the only thing I want to make sure of is, you might go and just find out that they're in the whatever winter garment business. Maybe you don't want to own that heading into summer, but just kind of keep looking through these chart shapes. Here's one that just keeps climbing. I don't know anything about them, but it's making higher lows and higher highs. That's a chart you want to buy. And even right here, it's just bounced off that 32.5 level, so I would probably look at trying to own that. Here's Chico's, and again, higher lows and higher highs. Looks like it's ready to break out to me, and so that's something you could look towards, and you can see the scooter ranking is above 76 now. And here's one with a giant 2-year or 1-year base, and it looks like it's almost ready to break out. It's a $2.40 stock, so unless you really like to play the small stuff, fine. Now here's TJ Maxx, and this whole group, 78.3 is the scooter ranking, trending bottom left to top right. You can get in that, and then you're going to go use the relative strength trend lines and that kind of thing to make sure that as long as the stock continues to hold up, you're happy. Here's Zoomies, again, higher lows, higher highs. Express, this one is just breaking out of a nice base here for 3 or 4 months, and it looks like it's headed higher. So perhaps you can get that on a little bit of a pullback and then try and catch the ride going higher. But again, we're not doing anything magical here, but the point is, how do you just go in and look inside a sector and see what's working? Try to find chart shapes. Here's one, fast retailing. I don't know what they do, but a break above $45 is new highs. I think you want to own that. Now, you could, right-click, open link in the new tab, and just go look at a 5-year view. Is that something you want to own? Well, it definitely looks to me like it's been getting better over the last couple of years. It's made its low back in 2016, but really, hasn't done a whole bunch. So if this is going to start making higher highs again, this is a pretty nice chart and a great place to get in. Okay, hopefully we covered that off. But the point... what did I do here, Safari? The point I want to make is just as you're working your way through these charts, real quick, just use these little boxes to say, do you like it? Here's Buckle breaking out. And again, there's 3-month or 4-month highs, and all of a sudden, recently, it started to move up into a new range. Those are charts that are working, and so you just want to keep looking at it. Here's American Eagle making higher lows higher highs, that's an uptrend. So as these stocks continue to work their way higher, set alerts, find things that you'd like, or a pullback to 120 on Burlington stores, and you know, you don't have to know a lot about these. The only thing you know, here's one just breaking out to, you know, in the last couple of days. I think that one's probably, you know, if you wanted to invest in that, you could do that right here, right now. And as these charts are working forward, it gives you an idea of what's working. And you know, you can't know every stock in the market. We're not all Jim Cramers, but I think the important thing is understanding, you know, chart shapes and breakouts. You're going to be able to pick up the trends that you want to find. Okay, so again, you can rewind the tape here to see how we got into here, but you can go through and do the same thing for grocers or for, you know, restaurants, all that kind of stuff. And feel free, you know, when you're doing this, not to get so trapped in a segment or whatever. As things are starting to move, you can quickly look through a group of stocks, and you know, you're just sliding your mouse up. There's nothing hard about doing this, but as these things are working, you can kind of keep watching to see if this is going to happen. So here's Nike. Perhaps it can break out through $70, you know, built a nice 5-month base or 5-month consolidation and breaks out to the upside. That's just a great place to enter. Decker's Outdoor looks like it wants to break out to new highs here. And Rocky Brands, I don't know anything about them, but boy, is that chart turning higher. So, you know, obviously some good stuff there. So if you could find a pullback in that stock, maybe you use a full stochastic indicator. Anything you'd like, you could go through and try to figure out, you know, ways to pick up these stocks when they start to improve. So with that, I should probably, you know, just kind of condense it again. When you're looking for sectors, like normally retail really starts to pick up in July. Some of these have been running for a while. I do want to show you Tapestry, and the reason I want to show you, I think it's TR. Let's just go Tapestry, TPR. The point I want to make here, it's just had a huge drop. And you can see it did the same sort of thing back last August. And then it, you know, ran from September, October all the way into the current period. Sitting right on the 200-day moving average. Let's just say that you wanted to buy this on a breakout back above 47.50 or whatever. As this chart starts to trend higher, you know, you've got the big picture, and I think the thing you want to notice the most is, you know, what's your uptrend like, making sure that this uptrend is holding. As this continues to work its way higher, you're buying it near the bottom of the uptrend, and as the stock starts to accelerate, you're going to do well with it. Okay, hopefully there were some ideas in there of ways to look for stocks in groups, find charts that are setting up. If you don't like using scans, this is one way to do it. If you like to use scans, you might not bother with this. But I find it pretty helpful to just go through and see what is working in a retail environment or whatever, and make sure that we're aware of that. So as the stock market continues to evolve and you have different industry groups coming to the fore and other ones falling away, you need to adjust your portfolio. I think this is one way to do that. So thanks for joining us on today's show. The final bar airs live on Thursdays at 5 p.m. Eastern Time and can be found on the StockCharts TV schedule for your viewing convenience at other times during the week. It is also available on the StockCharts YouTube channel. With that, have a great weekend and good trading. Here's how to add a moving average onto your indicators. Scroll down to the indicator section and use an overlay, picking simple moving average. And then you can specify the period, and if you use a colon symbol, you can also pick the color that you want to go with it, and then that'll place that right on top of your indicator like that.